Hey, good morning everyone. Welcome back to Brokerage Finance. My name's Levi Woods, and I am not a financial advisor. I don't work in the financial industry. I am not offering financial advice, but I am a long-time investor, and I'm 26 months from retirement. Yippee! Today I want to talk about minimum investment, and I'm going to look at it from two different aspects. This is making a purchase of equities and how much is the minimum amount that I have to invest. So we're going to look at two things. First, I'm going to look at brokerages that we do all the work ourselves. These are really low cost investment strategies. So the fees, although they're small, can still be substantial. So looking at a whole bunch of different brokerages available, I'm going to say that the average that I've found is about $10 per trade currently here in Canada. Which means that if I make a transaction, it's going to cost me $10 to make that transaction. It also means that it's completely useless to buy $10 worth of stock. If I buy $10 worth of stock, so I deposit $10, and then the fee for that is $10, then I'm left with nothing, and the $10 transaction fee negated the purchase of my stock, and I've had 100% loss. Also, if we look at that, if we were to say invest $1 million in a single transaction and only being charged $10 for that transaction fee, then that's like a super minuscule amount percentage-wise of our account. So what I want to do is do a little bit of math to figure out like what my targets are so that I can figure out my break even. As a dividend investor, I'm looking for a 6 to 9% return on my dividend equities that I buy, which means that once I purchase my equity, I'm not looking for stock growth in the value. I just want to collect the dividend, and that's my investment strategy. So today I'm going to try to use simple math. We're going to look at a fund, doesn't matter what it is, it's XYZ, and it is going to pay 6% theoretically in dividend, which means that every month we are going to get a 0.5% of dividend. So I always look at it as a time factor. If it's going to cost me $10 to get in, what is that a percentage of the total transactional amount so that I can recoup my costs in a reasonable manner? Now, I like to buy and hold for a really, really long time. In fact, most of the things that I buy, I never plan on selling. I'm just going to keep collecting the dividend. If they're going to keep paying the dividend, I'm going to keep collecting it. That's the strategy that I've chosen for my life, and it has worked out very, very well for me because now I make a very steady income off of my dividends every single month. But I want to look at minimums. So let's say we decide that we're going to get into an equity and hold it for 1 year. If it is making us 0.5% per month, then at the end of the year we've made 6%. So I like to use a transactional fee of around 1%, which means that if it costs me 1% to get in, then after 2 months, I've recouped my cost. If I need to sell the stock because it stops paying its dividend or makes an adjustment, or I don't like the forecast of the company, whatever reason I might have to sell it in the future, it's also going to cost me 1%, which means that if I use a 1% rule as the buying cost, I will also have a 1% as the selling cost, which means I have to hold it for a total of 4 months minimum before my break-even point. After 4 months, everything you make is gravy. So your dividend, if it keeps paying 6%, it just keeps paying that forever. And these are single transaction fees, so you're not paying like a mutual fund manager every year. You're literally just paying it once to purchase it, and then it's paying you every time after that. So we'll do the reverse math on that. If it's $10 and I'm aiming for 1%, $10 is 1% of $1,000. The minimum transaction amount, the amount of shares that I'm purchasing, has to be $1,000 if the trading fee is $10. Now, of course, you can go up. The higher you go up, the better. If you said $10,000 in one equity and you are paying that $10 transactional fee, then all of a sudden you're at 0.1% transaction fee to the purchase price. That means you're recouping your money almost instantly. You don't even have to hold it 4 months. You hold it for one cycle, 1 month's transaction, and you've more than covered the amount of the transaction fee. But not everybody has $10,000 to just invest in a single stock. So we always talk about diversification. Say you had $10,000, it might be a much smarter decision to put $1,000 into each of 10 different stocks, and then that way if one of them goes down, you're not losing a bunch of money. You've got diversification across your portfolio. So I am a huge advocate of diversification. In fact, my own personal portfolio, I like to diversify across 33 companies, and I keep 3% of each of those 33 companies, and then I take 1% in cash in my account. And that's basically the structure of my account. I have 99% invested, 1% cash. That 99% invested is equally distributed between 33 companies. I'm going to make another video on how I kind of manage that and those targets, but that's how I personally work. When you're starting out, you don't have that much money, so I think it's really great to diversify across like 5 companies. 10 would be even better. Somewhere between 10 and 30 is pretty optimal for diversification. So the target on a self-directed trading account is about $1,000 per transaction. Now let's look at broker assisted accounts. So this is when you have an account with someone and you phone up your broker. You're not making the transaction at all. They're giving you suggestions. They've done the research. They put in the trade. You were just making the buy. They will often phone you to tell you if you need to sell that. This is a completely managed account. For that, you pay higher fees. So you're going to pay an annual fee, first of all, and then you're going to pay a per transaction fee. And I'm going to look at Odlum Brown right now. Their minimum transaction fee is $100. So what is $100 compared to the purchase price? Now, we were using that previous comparison of $10 to $1,000. So let's look at what $100 is compared to a $1,000 purchase. If I phone my broker and say I want to buy $1,000 worth of stock, pay 6% dividend yield, my transaction fee at $100 is actually 10% of my purchase price, which means that over the course of the year, I'm only expected to make $60. 6% on $1,000 pays out $60 expected. That doesn't even cover my transaction fee. So I purchase a stock and I hold it for a year, and I still am down money. So it doesn't make any sense to make a purchase of $1,000 through your broker. It has to be a bigger transaction to negate that minimum fee. What I like to use for this target is 3.3%. What that means is that I am making a purchase of $3,000 through my broker of stock, and the fee that he charges is $100. Now that's 3.3% of $3,000. Now we look at it in terms of dividend yield. It means that if the dividend is paying out 6% per year, it's going to take you approximately 7 months before you've recouped your buying transaction fee. But remember, this is only a one-time fee. So after 7 months, you've recouped your fee, and then if you hold that stock for 10 years, it's now going to just pay out that 6%. So 3.3% transaction fee is not that bad for long-term investments. Now, if you're thinking, well, I want to buy these and I'm going to sell them next year, it's not a very smart move, because on the back end, when you sell them, you're going to also have to pay that fee again, that 3.3%, which means you actually have to hold, if you're going to buy and sell, which I don't recommend. I'm an invest for forever guy. That's one of my personal rules, is I buy something and I hold it forever. This is like straight from Warren Buffett. Buy good value stock, collect the dividend forever. That's why I'm making money now, because I bought stuff 20 years ago that I still own. 3.3% in, 3.3% out for transaction fees means that you would have to hold a 6% dividend paying equity for at least 14 months to break even on the transaction fees. So for the long-term investor, this is not a big deal. You buy and hold forever. But it does affect your account in a different way. If you have a smaller account, it means less diversification. Because if you're making $3,000 transactions on a $10,000 account, you can actually only make 3 purchases. So 3 different companies you're diversifying across, which that increases your risk because you have less diversification. Anyways, that's my thoughts on minimum transaction purchases. Quick recap: if you've got a self-directed, I like to use a 1% transaction fee. So $1,000 for a $10 transaction fee, 1% cost. On a broker-assisted account, $3,000 transaction fee with a $100 minimum works out to 3.3%. Those are the targets I go for. Obviously, if you can invest more money and diversify less, then those costs shrink as the transaction fees go down relative to the investment total. That's it for today's video. Hopefully you guys learned something from that. Hopefully that math wasn't too confusing. If you have any questions about anything, you want to know specifics about what I do, please ask them in the comments below. Let's get rich together. See you soon.